on guys, how are you doing? My name is Shocks and this is ShocksCapital FX YouTube channel. Today I want to show you an exhaustive all-in-one volatility indices strategy that you can use on any indices offered by Deriv. If you don't have an account with Deriv, this is the time for you to get an account. The links and the description down below. Just scroll down, register your account and be able to trade this strategy on Deriv indices. So we are going to be looking at V100 for a start and explaining our strategy. Our strategy is a two-part strategy that starts on the H4 time frame as our higher time frame and goes to the M15 for our entries. So this is what we are going to be doing here. Right, so what we are looking at on the H4 is market structure and the directional bias for a given day or week, depending on how and when we are looking at these graphs. So if you look at this is a candlestick chart, and what we are going to do is we are going to be looking for demand and supply zones or order blocks that are on the H4 that are easy to spot, easy to see. So what we are going to be doing is very simple. We mark out our break of structures like this, and we look for what? We look for areas where these would have initiated from, or areas of demand where these would have initiated from. So the moves that we are looking for are these aggressive moves. We look for break of structure. After break of structure, we just mark out the last opposite candle before a break of structure. So in this case, we are going to be using this particular order block to map up our trade, and after a break of this, we are going to be using this again as our order block and mark out and map out our trade. So this is what we are doing. And if you look at the end of this candlestick chart, you can clearly see that we have an order block here that took out structure at this particular point that you can see clearly. And what we are just waiting for is price to move back to the yellow zone and draw back to the other side. So this would be your order block, and this is how the setup will look like when you are looking at it in real time. So this is what you are going to do. So I'm going to be using these two examples to show you what you would expect on this yellow zone if you were to trade. So we are going to consider this first and see how it looks like on the M15. Right, this is the M15 of the same graph that I was showing you on the H4. So this is the candlestick chart that I showed you. So what you wait for on the M15 is very simple. You just want a break of structure, then you are in, right? You just wait for price to break in your direction, then you get in the trade. So what you are seeing here is very simple. You see price was moving up, right? Price was moving up, and at this particular point, it took out this structure here, breaking this with this gigantic candle that you can clearly see. So that engulfing black candle that you see would have worked as your break of structure, and your stop loss was going to go up here at the end of the structure. Remember, your stop loss goes outside the structure, so this would have been your stop loss, and you would have entered your trade at this particular point. Your stop loss goes above, and you are going to get your first take profit or your first partials at this particular point. Then if you were a little bit ambitious, you are going to set your take profit at this particular point. So this is how you would have entered or took advantage of that. So this is another we're back on the H4 here, and what do you see on this one? You see that we have this order block, and this is the retest that you would have been waiting for. So if you are trading on the H4, guys, you need a lot of patience, and you need to be patient with your setups. The setups are not going to line up every day, or are not going to line up every trading hour, so you have to be patient. So this is your this is your H4 order block, right? What are you waiting for? You're waiting for price to retest as it did here. So what do you do now? You go back to the M15 and try to see your break of structure and your trade. Let's go to the M15 and see how it. Right, this is the M15, and from what you are seeing here, you can clearly see that this order block that we had marked on H4 was retested at this particular point. And I'll give you another rule that you have to incorporate in this strategy. So watch to the end as I will be dropping that rule that you need to incorporate in this particular strategy. So what are you waiting for here? You are waiting for a break of structure or a break of these lows. So as you can see, price was moving up, price was moving up, and when it gets to this particular point, it breaks out here, breaks out with this candle. So what are you going to do? You're going to get your entry at this particular point. And where is your stop loss? Your stop loss is going to go above the structure, as you are seeing in this example. And if you were someone who was very keen on taking profits, you would have took your profits at this particular point as your first partial split. And as price retraces back to the as price retraces back the next day here, there is no way you are going to take a trade. Why? Because you just want an order block to be retested once and for you to take your trade once. If it gets retested twice, that is not your trade and you are not going to be involved in that particular trade. You see, there is another order block in this area that looks very good, and let's go to the M15 and try to get our entry. Then I'll give you that last rule that you need to incorporate in this trade so that you get a full confluence strategy. So you go back to the M15 and clearly see that this is what we want to be doing. And let's go to that order block that we see on the on the H4. So what are you going to do? You are going to be waiting for the first retest of the order block. If it doesn't retest like this, you are not going to get involved because you want price to get into the order block, break a structure, then you are in. So the structure is here that was taken out at this particular point. What are you going to do? You are going to enter at this particular point. Your stop loss is going to go above the structure, or if you don't like that structure, maybe you could have used this as your break of structure and you enter at this particular point. But the more you look at it, you will see that it's more like one and the same entry, right? So you are taking your profits as the next lows, at the next lows as price is expanding lower. So if it gets back to this order block the next day, remember we want to take the first retest of an order block. If it gets back, fine, but you're not going to be taking these trades. You just want one shot, one kill. So you are going to be waiting for that one retest on the order block. So the next rule that I want you guys to incorporate in your trading is the issue of the daily high and the daily low. If you want to buy, you have to make sure that your price is close to the previous day low, and if you want to sell, you have to make sure that your price or your entry is as close as possible to the previous day high, right? So this is the high from this previous day, right? So price is spiked this high and gone to retest the order block, as you can see in this area. So what are you going to do? You are going to take your trades from this order block, keeping in mind that you have a break above the high. You don't want to take shells when price has not at least reached out to the previous day high, right? So in this case, this is what you would have to do. Let's say you were going to take this trade again, you would map out the high as this one in this case. So this is the yesterday's high, and price spikes it up and goes down. So this would be a very valid trade for that sole reason. So this is what we are doing. If you want to get involved in this particular trade that I have mapped out here, remember the order block on the H4 that I showed you, that we are waiting for price to retest this order block and go down, right? So if you come back here to the M15, you clearly see that price is going to come back to this order block, and this is the daily high. So what do you want to see? You want to see price reaching out as far as possible to this high here and go down. If it breaks our order block, and that trade is not valid anymore. So we want to see price reaching out and maybe breaking the high using pins, right? using pins here, but we want to see price playing out close to the what, to the yesterday's low, as you can see in this in this example. So this is the strategy that you can use on any Deriv indices, and if you don't have an account, this is the best time for you to register an account with Deriv and trade indices as you go. So this is how you are going to be trading this. See you guys, trade what you see.
Introducing Deriv, one-stop shop to trade Forex, stocks and indices, cryptocurrencies, commodities, and derived indices that include but not limited to Volatility 75, V100, boom and crash indices, and many more. And to top it off, you can trade 24/7. Weekends are for trading. Deriv is one of the biggest online brokers in the world that offers the following: synthetics, CFDs, multipliers, options. To millions of consumers who have registered all across the world, we provide CFDs and other derivatives on currency, stocks and indices, cryptocurrencies, commodities, and derived. Simple, flexible, reliable. Pick from 8 effective platforms that were each created with your needs in mind. To benefit and be part of this, go to ShocksCapital.com and click Start Trading, or click the links in the description and pinned comments.